Hello everyone, welcome to this webinar on the Small Case channel. We are super excited to have you guys here. And we are so thankful for all of you guys joining us on a Sunday afternoon. See, we are at a very special time in the markets, right? Where we are seeing, a very good movement in the broad market indices. The market seems to be very, very bullish and happy after the recent election results. And very interesting patterns are forming. I think one big question that a lot of investors have is that, is this the right time to invest? Should we be adding our capital, or should we be scared with the high valuations and maybe wait? So this is what we'll be talking about in this presentation. We'll be sort of trying to dig into the recent market trends and trying to understand where in the markets we can invest, right? So I have a quick presentation for you guys and a very special launch that's going to happen, at the towards the end of this session. I'm sure many of you guys know about what we're going to talk about, but still, we'll be talking about something special towards the end of my presentation, and then there will be some question and answers from the audience, right? So we'll start off by trying to understand the trends, right, that the market is showing and where we could invest based on these trends. Uh, See, obviously, this month, ever since the election results have come out, right, you could see the market itself has rallied, from the 4th of June to now, almost 10%, right? And it's up almost 12% this year. Small cap index is up 24% this year, and mid cap index is up 28% this year. So, very strong growth across the market. And you can see that the rally seems to be continuous in the month of June and July, right? There doesn't seem to be any pause to the rally because a lot of positive sentiment after the elections, and you can see that FIIs are also pushing in money into the markets after a recent, after a pause that they took in the last couple of months, right? So if you look at these trends, you would see that in the last 1 year, small caps have definitely done better than the market, and the market itself is up 25% in the aggregate 1 year. Small cap aggregate are up 69%. And even in the recent months, your small caps have had a stronger performance in comparison to mid and large caps. If you look at the FII flow, you would see that FIIs have put in money after taking a pause for the last couple of months. So strong flow from the FII side also, and domestic investors seems to be bullish all across. We've seen some slowdown, in fact, in June from domestic investors. But otherwise, March, April, May, there's been very strong investor flows from the domestic side, right? So a lot of positivity in the market that we can all see. But we have to understand deeper and try to find out where the opportunities are and where we need to be a little bit concerned about, right? So, see, I think, the trends are strong and that's perfect. But, we also have to watch out for uh, the PE ratios, right? The how are we valued? I think valuations is a concern that people have all the time. People, are worried about, are we justifying, is the strong price trend being justified by the value that the companies have? So if you look at the trends here, you would see in terms of forward-looking PE ratios, we are right around the average, right? So not overvalued in terms of forward earnings, in terms of backwards earning or trailing PE ratio. We are slightly above the average, right? Slightly overvalued. In terms of PB ratios, we are at the top. And similarly, even in the trailing P ratios, there seems to be a divergence. And, if Nifty is priced highly in terms, if you are, looking at the PB ratios to evaluate the valuations. If you look at the sectors and you compare recent valuations with previous valuations, it's very interesting, right? So in the times when, we are all worried about what is valued, overvalued, what is undervalued. But if you look at it, you would see that, okay, capital goods are quite overvalued in comparison to their 10-month average. Consumer discretionary is overvalued. Infrastructure is a little bit pricey. Logistics is pricey. Oil and gas is pricey. Specialty chemical, real estate is extremely pricey. But if you look at, there are sectors which are actually undervalued as well, right? So for example, banks are undervalued. NBFCs are lesser than their 10-year average. You can see, even media, You can see retail are slightly undervalued in terms of the long-term averages. Autos are undervalued, and even sectors like technology, pharma are close to their 10-year average and do seem to have a lot of value, given that we expect positive trends in the coming years from these, right? So while some pockets in the market look pricey because there's been a lot of exuberance around those pockets, there are other pockets which are very conservative also. So what this tells us is that there's going to be opportunity, right? So even if, let's say, people start dumping things that are overvalued, there are so many undervalued opportunities in the market that will shine going further. But that is not to say that whatever is overvalued will not work anymore, right? In terms of, next big thing that's going to come is the Q1 earning, right? After the June quarter has ended, companies will start releasing their earnings. Very soon in the next week, we are going to start with the IT earnings, and some of the big names like IREDA and all are going to post their earnings, and that is going to be very interesting. If you look at the forecast, people expect 8% year-on-year growth on the revenue side. EBITDA is expected to, margins are expected to increase smaller by 12 basis point, and PAT growth is expected to be around 7%. And so, not like a very, very exceptional growth, but still, positive growth from the Indian market. In terms of what's going to work better, industrials, capital goods, sectors that have got strong order books, they are going to come out and showcase very good earnings. On the other hand, you would see autos, which have been doing extremely well, might see some deceleration. Uh, Segments might see some deceleration, and IT and FMCG, which have not had a good quarter for previous few quarters, will also see some sort of slowdown, right? In terms of banks, you would still see some strong earnings coming out, even though due to the RBI regulations and slow deposit growth, there might be some slowdown there as well, right? Obviously we can see that the trend in the earnings is changing. Top line and bottom line are sort of growing at the same rate, and there's a lot of dispersion across sectors, right? So that's the second big thing, right? I think we are all going to be very excited about the numbers that come out. And we expect, because expectations are moderate, we expect some companies to definitely beat those expectations. So there will be a lot of opportunities for short-term and long-term bets in the coming few days, right? And now the next big thing is on the rate cut expectations, right? That is what we expect to, really govern what's going to happen in the market, right? So if you look at the expectations for rate cuts, you would see that in the June meeting of the US Fed, nobody expects the rate to be cut, right? This expects probability of rate cut. You would see that people expect the rate cuts to be the same in July, but September is when people, a majority of people expect the rates to be cut, right? So we could expect that around September, there could be a rate cut, which would be a big positive that could happen in the market. Investors would get excited about countries like India. Indian market might see rate cut around this time, maybe earlier, you never know. And then, that would boost a lot of industries like banking, NBFC, real estate, and so many other companies that, gain from borrowing money at cheaper rates, right? So this is one big event that's going to come, and this is what the expectations are looking like. I think we've seen some uptick in IT stocks in the last month, in fact, and that might be because of this expectation, right? Now, finally, let's talk about some tailwinds or what sectors we can look at, right? And our outlook around it. I think, see, one big thing that's going to come out is the union budget, right? Union budget is right around the corner. I think date was announced yesterday that 23rd of July is when the budget's going to come. So it's only 2 weeks away. And, obviously people expect Modi 3.0 to have the same focus that they have had on infrastructure, right? See, the earlier budget that came in February for the Modi government did not have, a lot of big changes that were announced, right? Therefore, we saw some volatility in the PSU segments around it. But since then, the government has been able to collect a lot of dividend from the RBI So they do have money to spend for the economy. People expect that the Modi government will continue to have their focus on the sectors that are their favorites, right? Which are infrastructure, defense, railways, and all that, and energy transition. But on the other hand, people expect that they could also have some focus on the welfare side, right? Because in the recent elections, the rural population did not vote a lot for Modi 3.0. So in the new avatar of this government, there could be some focus on the rural development and welfare side as well. So two different type of themes could emerge. If there is rural spending, then you could see FMCG, you could see agriculture, you could see fertilizer, those type of stocks rally. If they continue to have a focus on infrastructure, then obviously the investor favorites, right, the defense PSUs and all that will rally. If there's a balance, then we'll see how that impacts the fiscal deficit. But big event coming up, and what's very interesting is if you look at the data, you would see that this quarter, irrespective of the budget, tends to be very strong for the FMCG companies, right? If you look at the margins of FMCG companies around the July quarter, you would see it tends to be always peak out. So there's a cyclicality in FMCG companies. If you look at the price trends also, right, you would see that the mean price trend for FMCG companies has always been higher in Q2. Median has been even higher. And so this seems to be a seasonally strong quarter for FMCG companies. So very interesting time for us to have those positions. Obviously, we'll have to be data driven. These historical numbers are just analysis, but we have to be data driven and we have to watch out for the margins peaking. The monsoons will have an effect on FMCG margins, and that could be a big positive here, right? Now, if the government continues to see, if you have watched the budgets from the Modi government and Nirmala Sitharaman, in every budget tends to talk about the green energy segment, green power segment. The current government has very ambitious targets from the energy transition theme, right? They want a majority of, they want India to become, highly dependent on renewable energy. They want to take India's renewable energy capacity 5x in the next 5 years, right? And therefore, we've seen stocks like which are in this segment, right? Solar manufacturers, transformers, switch gears, and all this whole value chain do extremely well. We made a video about this as well, this particular theme on our channel. You can go and check that out. But this theme, which has been very strong, and you'll see stocks like ABB, Siemens, BHEL, all of these guys will post very strong earnings also this time. Plus, you've seen very strong performance from this theme as well. So I think in the new avatar of this government, this theme will again be quite strong, right? Because this has been the continuous focus for this government. Now, let's talk about the second focus area, which is the defense and the railway stocks, right? Defense and the railway stocks have been the standout theme. Again, we made a video on this one as well. If you look at the theme, I have put out this couple of charts here. One is an average return of some of the top railway stocks, and one is the average return of the top defense stocks. You would see that the defense basket has grown 200% in the last 1 year. Railway basket has grown 110% in the last 1 year. So very, very strong, momentum across the board. And, obviously people are also scared a little bit, if a stock is up 200%, then you start getting a little bit worried about the valuations, right? So that is something that we have to understand. That is this the correct theme to still bet on? See, the government seems very bullish on this theme, but can we still bet on this theme? That's a bigger question, right? See, if you look at the recently launched Nifty India Defense Index, right, you'll see the index itself, right? The index is up 200%. You never see an index be up 200% in 1 year, but this index is a standout. And if you're watching the news, you would have seen there was one defense ETF, defense index fund that was launched. That one got the highest ever NFO volume, right? Highest number of people subscribed in any index fund throughout the history of index funds in defense funds. So it's a strong theme where you've seen very big returns, but then if you see 200% returns in any sector, you get worried about the valuations, right? So if you try to understand the valuation, you would see that obviously valuations for these defense stocks have grown almost doubled over the 1 year. As the price trends have increased, the valuation has also increased. But all of this growth has happened with strong earning growth as well, right? If you look at, if you look at the recent earnings also, people expect BEL, Bharat Dynamic, uh, Midhani, all of these stocks to post very, very strong earnings. And, so the valuation that these companies are commanding right now are being justified by the earnings. And if you look at order books, right? Order books means how much orders that they have to deliver on in the future, which means that all of these orders that they have will convert to revenue for them, right, in the next few years. So they do have very, very strong order books. Like HAL has an order book of almost 95,000 crores. BEL has a very strong order book. Similarly, Mazgaon Dog, Garden Reach. And if you're watching recent news, you'll see various companies are getting more and more orders, right? So seems to be a strong theme, but we have to be a little bit careful that once these stocks have run up so drastically, any negative news can have a big impact, right? For example, if the profit is growing at 100%, right? If it even comes down to 80% or 50%, people would get, 50% profit growth is not bad, but people will get extremely worried. Okay, something has gone wrong and I need to sell this stock, right? So you have to be careful about the valuation of these stocks, plus especially the cyclical sector, highly dependent on government spending, right? So if government changes focus, that could also impact this sector. But all in all, it looks attractive right now, but therefore, you have to have a little bit of caution in these stocks as well. So having talked about that theme, let's also talk about this new theme, which is public versus private bank. Recently, in the recent month, we've seen private banks pick up in comparison to PSU banks. PSU banks have been the winner for the last 1 year. They've grown 79% versus 13% growth by private banks. But recently, private banks are picking up. If you look at the valuations, you would see private banks' PE ratios are undervalued by a good margin. And here I have PSU bank PB ratios, and you can see they are a little bit overvalued from their historical averages. Obviously, things have changed a lot for PSU banks since 2021-22 when the government restructured their debt. So, the higher valuation might be justified, but still you could see private banks are extremely undervalued, and there seems to be increased focus for these stocks, which could, make private banks grow faster in comparison to PSU banks. Finally, let's talk about the IT index. IT index again, has picked up a lot of pace in the last 1 year, 1 month. Even though it's been very volatile, it's not been investor favorite. I think people expect decent earnings or good guidance to come out from this particular earning season. But we are not extremely bullish that things are going to change right now. Things will change maybe in the next couple of quarters, but we don't expect anything drastic to happen in this quarter. That was a broad analysis of the market. Like I said, a lot of interesting themes, and we are quite bullish about the potential of the Indian economy. And we expect, the favorites of investors to still shine, but new trends to also start to emerge, right? So with that, now let us go over to our new launch or new discussion that we wanted to have, and our that is something that I'll cover. I think I also have another side where we talk about the performance of our small cases. I think we get a lot of comments. I'm sure we're getting a lot of comments on the performance of our small cases. You'll see the performance has definitely been strong. Our small cap strategy, New India strategy have been standout performers over the past year, month. And so even our Titan strategy has done extremely well, right? It's been, it's a large cap strategy, but it's been very stable and has beaten the index by a margin. Momentum had a great month, right? So all in all, I think Alpha Prime also had a good month. And we're seeing recovery happen. So, I think very good performance across the board by our strategies. But, we have found out that there's a lot of people who want to invest larger amount of capital into our strategies, right? They want to invest bigger sums into these products that we have. And for those set of audience, we have launched something new, which is something we are calling HNI Quant Advantage. So this is something that we did in collaboration with the small case team. We found this theme and we sort of thought that it's a good time for us to launch a product which will be available only for a limited set of users. So it has been there, right? So we launched this product, to be honest, a couple of months ago. Limited set of people got access to these strategies. We talked about it to them. We have, I think, a good set of people already invested, and like I said, it's a limited access portfolio. So we will close it down after reaching a certain threshold. See, what we're trying to do with this particular strategy is that, add a little bit of differentiation to this strategy. It's an active strategy. What that means is that the rebalances happen on a need basis, right? So the rebalances will not go on a weekly basis or a monthly basis. They will go when we see that there's a need to rebalance, which typically happens around some big events or when there's some changes in particular stocks. And like everything that we do, it has a theme of factor investing. It has strong risk management, and being for the HNI community, where they're going to put a very large amount of sums, you will also get dedicated support from our team. You'll have relationship management. You'll get some goodies and all that, right? So similar to everything that we do here, what we're trying to do is again invest based on multiple factors, right? We try to break down any stock or portfolio into a number of factors, and then we have a systematic approach, right? We do not take manual calls. We create a system that does stock selection, risk management, allocation, and takes a fully objective approach, removing all the investor biases, and giving you stronger risk management, statistical analysis to find actual themes to invest instead of being anything ad hoc, and coming up with something which is much more consistent and reliable in terms of performance, right? So that is what we have in terms of the strategy. You would see, like I said, it's a systematic strategy. So we are looking at everything from fundamental data, technical data, macroeconomic estimate, sentiment, doing position sizing based on that, risk management, cost management, coming up with an optimal portfolio. So HNI Quant Advantage here, see, like I said, it's a limited access portfolio meant to invest larger sums, right? So if you want to invest into this small case, the recommended investment is 25 lakh plus. And because there will be limited set of users who are subscribing to this, there would not be any sort of crisis in terms of liquidity, right? So I think a lot of people would complain, okay, whenever I try to put my orders, I see stocks have run up. So because this one will have limited access, you can invest larger sums to this portfolio. Also, because it has limited access and people have a relationship with our team, so we can go with a wider set of stocks. We can include slightly smaller stocks in the portfolio, because we can recommend actively in this particular avatar, right? In terms of rebalancing, which is very crucial, is that you will have dynamic rebalance, right? So doesn't mean that the rebalance will only come at the end of the month. If there is any change that has to happen in the middle of the month, then the rebalance will come in the middle of the month instead of waiting till the end of the month. So it will be active and need basis rebalance. You will also have access to an expert team of people, dedicated relationship managers who are looking at it. Plus, you would get, so last month when we rebalanced this particular portfolio, we got on a call with all our investors. We explained to them the rebalance, and, there will be closed group discussions and closed group reporting as well, right? So a lot of benefits with this particular small case. Again, see, it's a need-based rebalance. We are picking from top 700 stocks, so wider universe. There will be 20-25 stocks. You would have sector allocation of less than 20% in any particular stock sector, less than 10% in any other stock. And, we will be combining risk management, cost management, and tactical allocation to come up with the optimal portfolio. So there's a couple of examples. Again, these are not recommendations at all. Just to show you the examples of stocks that have been added in this particular portfolio and how they're selected, you'll see Recent addition was Exide Industries. It has strong momentum, very good valuation, and strong liquidity and volatility. That's why it was added. Another stock that was added was Kirloskar Engineering. Again, very strong momentum, good valuations, strong volatility, liquidity as well. Couple of stocks that were removed in the last rebalance were something like LIC, which uh, is not being favored by the market that much. We also removed something like Tata Communication, which again is lagging in the estimates recently, right? If you look at the backtest performance, again, this is backtest, not a not any promise or proof, but this is a backtest of our strategy, and we expect it to have very strong 44% plus CAGR. We take slightly higher risk in this strategy. The drawdowns expected are lower than the market and very good risk-adjusted returns from this portfolio. If you look at recent performance, like you said, we launched this out to the public in April. We kept this strategy live since March. You would see this has delivered 22% returns since the last close to 4 months, much better than the 15% by the multi-cap index. Recently, in the recent month and week, it has done very, very strong performance. I think the link to this particular portfolio is on your description, so you can go check it out. In terms of stock allocation, you would see that very healthy mix of very diversified sectors, almost equal weight to large, mid, and small caps. You would have metals along with engineering, defense, along with financials, pharmaceutical, auto, etc. Right? So very diversified, interesting composition. So that is broadly what I wanted to cover in this particular session. I'm sure there's a lot of questions that are coming out. So why don't we jump on to the Q&A?
Yeah. Hi, Sonam. Sonam, so we've got a few questions from different people. Some of them are more HNI related, some of them are more generic in nature. So we'll try to keep a healthy mix here. The first question that I have here is from Mr. Squid Bhai, where he's asking, what is the outlook for the stock markets from the perspective of, with the budget that's coming up and the interest rate forecasts that are there? Any sort of thoughts you can share on that? That'd be great.
No, I think the budget definitely is going to be positive for the market because the government has money to spend, right? So there's going to be a very interesting allocation to the chosen sectors. I think the big question would be, is there going to be welfare spending or is there going to be infrastructure spending? I think it would be a mix, and budget is going to be positive as per our understanding. Again, rate cuts, like we discussed, will be big positive, and if they come sooner, that would be great, right?
Yeah, yeah. Then there's one more question here where they're asking about, the fact that we've written an article about defense stocks. There's a video as well on it. They're asking if that's a basket that we can do, or if there are any portfolios that we have where there is a higher allocation to defense stocks in general.
So we don't have a specific baskets on the defense theme because it's very thematic. It might be cyclical, right?
Yeah, yeah.
We might be at the near the top of that rally, somewhere close.
Sure.
But yeah, see, your new India manufacturing has a lot of focus on defense. Even the HNI Quant has defense stocks, and that's why it has done really strongly in the last 1 month when the defense stocks have rallied, right?
Yeah, yeah. Speaking of New India, I think that's a question that one user has asked, where they're asking about if you can shed some light both on New India and on the innovation portfolio. And what type of allocation do we typically see there, and is it focused just on, let's say, defense or green energy, or is it a wider mix, so to speak?
Yeah. No, so I think, see, both of these themes, innovation and New India, see, how we create these portfolios is that first of all, we'll create a universe, right? So the universe would be, yeah. So universe would be, let's say, in the innovation theme, the universe is, industries where we are seeing innovation in the market, the digitech, digital theme, EV theme, pharma in based innovations, right? So all this innovative sectors. So, this is something we started somewhere in 2021, if I'm not wrong.
Yeah.
This was the recommendation. So this was around the time when the ARC ETF, right?
Yeah, yeah, yeah.
Was doing extremely well. So, so that is something that people wanted us to replicate, and we did it. And again, it's been a strong performer, right? It did extremely well when we started, and IT, which is some allocation in this portfolio, seems to lag sometimes. So, performance has been mixed. New India is a theme that we recognize somewhere in 2022. We sort of recognize that stocks where the PLI is happening, where the government is spending money, Make in India, China Plus One, all of these themes are working very strongly, right?
Yeah.
So we created a basket only of those themes. So see now how both of these portfolios work, Siddharth, is that basis of these themes we just create our universe, right? So in the New India universe, you would have, let's say, a set of 200 to 300 stocks, right?
Mhm.
And similarly, in the innovation basket, you would have 100 to 200 stocks. And now what we're trying to do is find the top stocks to invest. And here we'll again choose momentum or low volatility depending on the market scenario to choose the stocks to invest. So you are using these themes to only filter out the stocks, and then we are using quantitative methods to form our portfolios.
Got it. Got it. There's one question here from Finance Guru where they're asking what is the outlook for PSUs, infra in general, and with the coming sort of monsoon season and the potential change that will happen to food inflation. Will FMCG perform, better in the next few months if monsoon is not as expected, essentially?
No, I think that's a very interesting question. If monsoon is not as expected, then you see that FMCG basket tends to be under stress. But still, we are seeing some good tailwinds coming from the agriculture rural segment. So I think we're going to see some positives, and obviously a bad monsoon could have an impact. But right now, we are seeing good signs from that sector. Infrastructure theme, see again, if the government puts in money in infrastructure, again, you would see that continuance of that rally. But if the theme shifts to welfare, then you could see some sector rotation, right?
Yeah. Yeah. Got it. There's a question here on HNI where they're asking, so I think this is one of the existing investors potentially, where they're asking about whether they should do a lump sum or wait for a dip to invest new money in the HNI small case specifically. And if you could shed some light also on the minimum amount and the recommended amount as well.
Right. See, I think, I mean, I would not ask you to withhold investing in this market. The market is strong, right? There is a strong theme. FIIs are putting in money and things are looking attractive, and we expect budget to be positive as well, right?
Yeah.
So no opportunity to sort of not invest. I think it's the correct time to put in money for sure. And if investors are looking to add money, so even when we allocate money into strategies managed by us, we
Mhm.
are putting in money in the market right now, right?
Yeah. There's a question here where they're asking about, sorry, just give me a minute. Yeah, they're asking about rebalancing. So this is from Mr. Viklu Devan, where they're asking about one, it's more like a suggestion rather, where if we're doing a rebalancing, maybe we can share some more updates or insights into why we're adding or removing a particular stock. And then there's a second point here from Mr. Chetan, where they're asking about for the right momentum, can we do a more frequent rebalancing as opposed to a monthly rebalancing? Maybe shifting it to, let's say, a require as needed or a required basis rebalancing. So, any thoughts on those points?
Understood. No, I think that's a good question. See, we can give you better rationale for rebalancing for sure.
Mhm.
So we do send out a report. We can make it better if you think that helps. In terms of second part, which is
Rebalancing of the right momentum portfolio specifically.
momentum. See, I think a monthly momentum rebalancing it works for us. We have tried weekly before,
Yeah.
and we realize that monthly seems to do better. Uh, and if we need a see a change or a need to intervene in the middle, we do intervene once in a while, but we don't tend to you know sort of bombard people with the rebalancing, right?
Yeah, yeah, absolutely. Let me just take one more question from the general audience, then we can talk about the other queries. Just a minute. Yeah, so there's one more question here where they're talking about Alpha Prime specifically, and I've seen a few of these queries. So any thoughts on Alpha Prime in general? A lot of it is just to do with just sort of updates and performance, etc. But any thoughts on that?
No, I think Alpha Prime did have some correction in the Feb March, right? It was underperforming for a couple of months. Since then, it has had very decent performance. It has picked up. Does have all the attractive themes that you're looking at. It has does have some defense allocation and a very diversified set of stock. It has metals as well. We saw very strong 7% returns from that strategy, beating the benchmark in the last month. And we
Sure.
expect it to do strong. And we do intervene into it once in a while, a little bit more frequently. But I think it's a strong portfolio, and we expect it to do well, right?
Sure. And just on Alpha Prime, there's one more question where they're asking about they're an investor. It's doing well for them. They're saying that is it a good time to sort of average out some of the stocks that they've bought in Alpha Prime in terms of sort of adding more capital to Alpha Prime? One, and then two, again, the sort of budget question: should they be investing before the budget right now in the Alpha Prime strategy?
No, I think it's a good time to invest, right? And we expect budget to be positive as well. And you could add to the Alpha Prime basket. In the rebalancing that's coming tomorrow, there are no changes. So
Mhm.
I'm just giving you this, insider news. And tomorrow, so you can add and average out your investments. If we see a rationale for change in the coming weeks, there might be one or two stocks that change, and that is how it goes, right?
Sure. So on the HNI, I think there's a few questions as well, which is one of these questions was on again timing, I suppose, which is again I think we've answered it a little bit, but maybe from an HNI perspective, when you're investing, let's say the recommended amount of 25 lakhs, how should one go about it given the current sort of budget is coming up in the next couple of weeks, and the broader outlook? So should they do a lump sum? Should they do a minimum amount of 4.5 lakhs and then sort of top it up? What should be the rationale or the strategy there?
No, I think, see, the markets are strong. The opportunity that is coming right now from the market is something that we don't want to miss, right? If you're a little bit scared about the valuations,
Mhm.
you could possibly, deploy a hedge, right? Use a small amount of money to buy a hedge. But otherwise, I think it's a strong market, and um, it's if you're looking at the rally, it's a once in a lifetime market which is giving you this strong performance, and I don't think there any reason to miss it. Um, Eventually, I think there might be short-term correction that could be part of, market always corrects itself,
Yeah.
right?
Yeah.
And earnings will be very interesting to watch. I think the expectations are not very high in the industry, so we might see many stocks outperform their expectations as well. But so a lot of interesting cues coming out. But you guys, I think I would not want to miss this rally that's happening, and different tailwinds will continue to start working. Therefore, the strategies that we offer, we saw the HNI Quant, right? It does have a mix of financial, metals, infrastructure, autos, so a healthy mix of stocks, right?
Sure. Yeah, absolutely. And then just to sort of add to that, I think the minimum amount for the strategy is 4.5 lakhs. You can invest with that amount. Beyond that, you can do an SIP or a lump sum depending on your personal capacity and take it up to that 25 lakh recommended amount essentially. Right.
Right. Right.
So there's a question here from just a minute, Mr. Karthik, where they're asking again on the amount that needs to be invested beyond the recommended amount of 25 lakhs. Should they do an SIP? Should they sort of just let it be? What should be the broader
No.
strategy?
So you can do your SIP, right? There's no problem with that. And second thing is, see, here, for our investors, we created like a closed group, announcement group.
Yeah,
So when we see an opportunity, okay, let's say there's a correction that we think, and there's a good time to jump into the market, we'll send you a message on the group. We think it's the right time to add capital, and you guys can go ahead and do that.
sure. There's one question from Mr. Mehta whether he's asking, he's already an investor of Alpha Prime and Titans. It's done well for him. So they're asking, should they continue with those strategies and add an HNI, or should it be that they should have a mix and match between the two? How should they sort of look at it?
No, I think this is totally based on your risk profile, Mr. Mehta. I think HNI Quant is a place where you could add a larger capital. So
Mhm.
it is suitable in that way, and even our other two strategies where you invested are very interesting, right? So Titan is giving you the theme of large caps, Alpha is giving you that high paced returns, right? So all of these interesting themes, but you can definitely, if you're looking to allocate a larger sum, I think HNI Quant might be an interesting one for you.
Sure. There's a question on the sort of priority support from Mr. Goenka, where they're asking one, again, what's the difference between HNI and the existing small cases, be it balanced or alpha prime, etc. And in addition to that, how exactly would the sort of support be? Like what is it that they're getting for it?
Okay, interesting. So, see, the difference is, technically it's a need-based rebalancing. It's not on a regular date, so it will have a more active element. Second is that it is a larger set of stocks, top 700 stocks, right, instead of 500 because it's a limited set of audience. That is one advantage.
Mhm.
And yeah, I think the themes that we are following here are unique. It's not similar to any of our other small cases. It's
Mhm.
multi-factor with a strong focus on momentum and the other set of factors. Highly managed. So yeah, I think in terms of theme, that's a differentiator. In terms of support, if I were to tell you, like I said, you'll have a dedicated number which is different from our customer support number where you can directly call, and some senior relationship manager will pick up your call and discuss whatever has to be discussed. You would have a dedicated WhatsApp number where you can reach, and my whole team is there to talk to you. You would be part of an announcement group where all the crucial things will be announced. And Siddharth has designed a very nice welcome package for you guys, which you will get once you subscribe, right? So a lot of interesting things.
Certainly. I will go back to some of the other general questions. Just give me 1 minute, so that we have a mix here. So there's one question here from a student. They're undergraduate in engineering. They're looking to get into quant investing. How should they approach it? What should be the thought there?
A very good question. See, you have to start by learning and then experimenting with the market, right? I think getting an experience at an existing place would not hurt you because, you learn a lot when you are there in the market and you're seeing all the movement around you, how people deal with risk and how people uh, do consistent performance. So getting experience, learning about the market. If you want to do quant, right? See, it's a mix of various things. It's a mix of programming, statistics, uh, and financial markets, right? So you have to get exposure to all of this. See, I will not tell you that, I knew all of it the first day I started working in quant finance. It took me years to learn all the aspects that are needed. So, be patient with the thing, and there are courses that you can do. We offer a lot of interesting courses, right? We are collaborated with a number of, very reputed global uh, instructors who have courses on algorithmic trading, quant investing, and a bunch of things. So you can go ahead and, enroll to those courses. Very interesting place for you to learn. And then, like I said, do your experience in the market, be it by doing it on your own or joining some other place where you can get this experience.
Yeah. There's a question here which is slightly interesting. They're asking about how much skin is in the game for us as investors or investment managers rather, or us as the company, and how much, yeah, what's the just sort of thoughts on that?
No, I think our company, almost everybody in the team, because we give out one benefit of being in our team is that people get free subscriptions, right? So everybody is subscribed to our small cases, our PMS. I think majority of people's invested are sitting with our strategies. Even as a company, we are a venture funded company, so there are constraints on where we can invest, but we are sort of trying to put in the company capital into the markets through our strategy as well, right?
Yeah, absolutely. There's a specific question here in terms of stock. One of the individuals is asking about KRBL. They're asking about the selling target price for that. I think they might have heard one of your earlier webinars potentially.
Ah,
He's been invested in that stock for the last 2 to 3 years. In his personal portfolio, hasn't done well, so he's just wondering any insights you have on it.
So it's very interesting, and I'll just put a disclaimer that I added this stock very recently in our PMS, right? One of our strategies, and it's done strongly in the last few weeks for sure. See,
Mhm.
again, I think it's a rice processing and exporting company, and we expect that, like, we're seeing some recovery in the rural segment. Obviously, in the last couple of years, while he's been invested, the stock has not had a great time, right? Rural demand hasn't been very strong, right? Rural recovery hasn't been good since COVID, to be honest.
Yeah.
But we might see some strength in that stock, given that that theme might be strong. And if budget favors the rural segment, then you could see a very good potential returns, right?
Yeah, absolutely. So there are a few questions that are coming in. I'll just take one from the list that I have here. Mr. Bansal was asking, one of the big challenges that he's faced typically with dynamic rebalancing is that they want to know about the update, and typically that update is coming on the next market day. And by that time, they want to see the stock, they want to understand it a little better. So how can they sort of rebalance in time? And again, what is the right time to rebalance? Is it on the morning of it? Is it in the evening? Et cetera, et cetera.
See, I think you could do it anytime in the next day, right? There's no strict C number. If you even look at the small case performance calculation methodology, right, through which we are tracking these portfolios, they actually take average price for the day on the rebalance, right? So they're not just picking the previous day's close or the open price or the last price. They're taking average of the day of the rebalance, right? So you could in fact rebalance anytime. See, we've seen it. I think it's because we are doing strong stock picks, Siddharth. But for many times when we are rebalancing alpha prime, on the day of the rebalance, these stocks are hitting their
Upper
high
circuits.
side or
Yeah.
something. But it's not. I don't think it's because of alpha prime per se, because we don't have that much volume, right? To be
Correct.
honest,
Yeah.
to move the market, it's just that we have picked these stocks on the right time, which is why we might be seeing this rally. But I think that if you're rebalancing on the same next day, it is you can do it any time of the day. Typically, trading in the last half an hour of the market gives you the VWAP price, which is great, but you could do it anytime, right?
Yeah, yeah, absolutely. There's a question from Mr. Gandhar and similarly another question here as well, where they're asking about what investment product should they go for if they want to invest a largest capital in the market, or should they wait for the market to correct? Those are two separate questions, I suppose. And that so largest sum for him is around 50 lakhs or more. And similarly, there's another question here where one of the investors is asking about should they sell their existing portfolio of, let's say, mutual funds that they've been accumulating to sort of invest in, let's say, an HNI or any of the other
Mm.
investment products, equity products that are there in the market right now.
Right. So I would say that you could invest into. Is it the right time to invest? I definitely think it's the correct time to invest. Markets are strong, right? And I think this year is going to end up good because of upcoming budgets, the rate cuts. So a lot of strong themes at play. So I won't say that it's not the right time to invest. I think it's a good time to invest. Second question he asked is, should he sell everything to invest into? See, again, you have to find out what fits into your expectations and your risk profile, right?
Mhm.
Do you think that let's say an HNI quant is something, obviously we expect strong returns, right? We expect 40% CAGR without removing the cost from this strategy. And obviously it will be cyclical, right? It doesn't mean ki, the first year you're going to get 40, right? First year you might get smaller, and then whenever there's a bull market, it picks up, you get strong returns. But if you, let's say, have a long-term vision, right? I want to compound my wealth for 5 years. This product suits me, then why not put in your money into one of your chosen products, right?
Yeah,
Because,
absolutely.
because see, if you are investing into a whole bunch of mutual funds, you're over diversified, uh, and if if there you're getting 15-20% returns, and here you can get higher returns, then why not take that bet, right? If it suits your risk profile, right?
Sure.
That is what our thought process is, right?
Yeah, yeah, absolutely. There's one question here where Mr. Chetan is asking about the HNI, is the HNI a mini version of, let's say, the Wright PMS? What's the pricing? Can you shed some light on it as well? How
Right.
should investors go about it?
Right. So see, it is, I mean, it does have some similarities to our PMS, but it's not an exact replica, I'll be very honest. It does have similarities. It's a need-based rebalancing. It has a wider universe, and there are certain stocks that might be overlapped, but there are two very distinct strategies that run.
Mhm.
Uh, so, it has more in overlap with the PMS compared to our other small cases. Second question is on the pricing. See, if you go and check the link in the description, you will see this is a slightly pricier strategy. The fee for it is slightly higher than other products because we expect you to put larger sum in this, right? So if you put larger sum into this particular product, only then the pricing sort of makes sense for you, right?
Yeah,
Uh,
absolutely.
yeah.
Mr. Deepak has asked this question a few times. I will take it up. I have a long-term perspective of around 15 years. He's got around 6 lakh plus to invest and is also willing to do SIPs. Can you suggest some of your favorite Wright Research small cases to invest in?
No, so my favorite, I really like all the, I think 6 and 7 products, right? So HNI Quant is 7th product that is live for us now on small case app, but if you're looking at a moderate sort of risk, then Titan or Balance or Momentum might be a very good pick to go with. Looking at slightly high risk, then you could go with a New India, a small cap. These two have been really standout products. If you look at the performance for 1 year, they really stood out. And then Alpha Prime obviously is the investor's favorite. And finally, the new one, HNI Quant, right? Again, I think we are very, very positive about it. So I have named all the products. I have not chosen anything for him. I think you can see what fits in your risk profile
Yeah.
and take your call.
Sure. I've seen this question a few times, so I will just quickly answer it. So weekly rebalancing in Alpha Prime is a very short period. It may be extended to at least fortnightly basis. So I think the way that the strategy works is that we've listed it as weekly rebalancing as opposed to monthly rebalancing. But practically speaking, you're rebalancing it about 2 to 3 times sorry, once in 2 weeks or 3 weeks is what we're rebalancing right now. And that's just a practical application, but I think there's just a limitation on um, terminology that's available on small case that we can do.
Right.
One question is from Mr. Gautam here, where he's asking about alpha factor, and do you think that as a factor group will do well in the current year?
No, no, I think definitely it should. We are taking a bet on it, so we expect it to do well, right?
Um, one is on small cap rallies. So this is Mr. Thelshan. He's asking, do small cap seem to be at the top of their rally right now? And do you expect any sort of corrections to come in the near term?
No, no, I think, see, we talked about it, right? There are certain sectors where there is overvaluation, there are sectors there where undervaluation. I don't think small cap as a whole or a market as a whole is going to correct. What could be the reason for a bigger correction, right? We don't have any such reason. There could be some pockets that might see some volatility,
Yeah.
right? Let's say, for example, if the defense sector does not get a lot of allocation in the budget, the people might they might consolidate a little bit, right? Those type of things could happen, but no reason for any big correction in the small cap segment. And we are positive about it. We are seeing a lot of positives for different sectors, right? Even if they are a little bit overvalued.
Sure. Given the larger size of capital that's required for the HNI, there's a question that I have here from Mr. Samir, where they're asking, are we going to restrict the access to the portfolio? Is it for a limited user set? Any sort of thoughts on that or any information on that for the users?
Yes, yes. We are going to limit it after a certain point. That is what the idea is with this particular product, right? It would be a limited access product.
Yeah, absolutely. And in terms of the backtested results, again, not talking about returns here specifically, but how do you see the strategy doing on a longer term horizon, be it a 3 year or 5 year or a 10 year horizon?
No, no. See, I think in the 10-year horizon, we see very strong numbers. We do have focus on momentum. We do have strong risk management like that. Those are two things we do really well at Wright Research. And if you combine both of these things, you get strong performance. In the last 10 years, you would have seen, like I said, 40% CAGR from our back test. which is, we are not removing cost, like I said, removing at tax, like I said, but this is all pre-cost, pre-tax returns. We expect very strong numbers. And, if the market stays strong, then the strategy would give great returns, right?
Yeah. Just a few more questions. Let me just see if there. Okay, wow, there are quite a few here. Yeah, one of the questions that we've seen here is also talking about again going back to rebalancing. If I want to add funds, which day will be better for the rebalancing day, or is it any day? Mr. Ravindranath, you can just sort of rewind the video a little bit, and we've just sort of answered that. But in short, you can rebalancing on the day of the rebalance or in the next couple of days. Typically, the stock will not fundamentally shift. There's one question here where they're talking about what is the sort of target audience that you're looking for, or what is the right investor for the HNI community, for the HNI portfolio that we have? And is it that they should be one having that, let's say 25, 50 lakh of capital, or can you just start out with a smaller amount of capital to begin with?
No, you can start with a small amount capital and then add to it. I think recommended size is 25 lakh. So you can do that. In terms of audience, see, we did discuss when we were launching this product that you could have, people with larger sum to invest, who are looking at a quantitative strategy, right? Who don't want to go with the older, with the mutual fund products, or, let's say any other products which are passive in nature and they want active quant strategies. It is suitable for them. So be it you are a professional or you are a retiree or you are a businessman who is looking at an active allocation and you want to work with a small case where you get to see the allocation and you get to have the DIY element and you
Sure.
tend to understand our philosophy a little bit in real time. I think that's what would be the suitable audience, right?
Yeah. Mr. Shoaib is asking, is there any threshold limit for the amount that is invested in the HNI Quant Advantage?
Oh, I mean, we've not put an upper limit because, like I said, we'll block it after a certain time, right? It's restricted access, so you can invest a larger sum in this one.
Correct. So there's one question on right title. Mr. Dev has asked that we're seeing about 20 odd large and mid cap stocks in the portfolio, like high quality. But do you think that the performance might diminish over time due to the sort of over diversification towards large caps or mid caps in that portfolio?
I think, see, it will have a large and mid cap focus, right? It will not go to smaller stocks. So it will. So you see, our expectation from that portfolio is not, returns are not extremely high. It's a large cap portfolio, right?
Yeah.
Large cap would have slightly lower returns compared to some of the small caps, and you might see good performance, but it will have a lot of resilience, right? So market corrects if there is any volatility, like we saw right before election, there was a lot of volatility, but Right Titan tended to do very strong, right? So it's suitable across market scenarios, very stable portfolio, and that is what we are going with in that particular one, right?
Just a few more questions here, I suppose. One of the questions is on just a minute, on a discount on quant from Mr. Kalpak. So there are no discounts on quant right now. And I don't think we will be announcing any discounts on quant, given that it's a very premium offering. But again, any thoughts from your side on it?
No, like you said, there are no discounts right now.
Just one more question I had on HNI. So on the HNI, so there were a few questions around derivatives and option trading, etc. Is there anything that we are introducing on the HNI quant? Just any last thoughts on that?
No, not really. See, on small case, you can't do derivatives, but like you said, you will have an access to our team, and you could talk to us, and we could guide you if you needed any help there, right?
Sure. I think that's largely most of the questions that we've covered. Any final thoughts on HNI quant, Sonam, for the audience?
No, I think it's a great strategy, and if you are looking to to take advantage of this quantitative strategy, build a sizable portfolio with it, and accelerate your wealth generation with this active strategy. It's a great opportunity for you to do it. And I think once you are investing larger sums, sometimes you do need access to talk to relationship managers, understand it slightly deeply, and that is what we are providing here. So it's a great opportunity for us to build a long-term relationship with some of our investors.
Sure. No, absolutely. And I think given that the next few months are probably going to be hopefully better for the Indian markets as well with the budget and potentially interest rate cuts, do you think this is also the right time generally for the market to invest in?
No, I think it's a great time, and I would say we should not lose this opportunity, right?
Yeah, absolutely.
And like we said,
Great. Yeah.
these are all risk managed portfolios. So if there is any risk to manage, we'll do it for you. But I don't think we should miss out the opportunity that's out right now.
Yeah, absolutely. Great. I think that's all we have for today. I think we've wrapped up that 1 hour of the live on a Sunday.
Yeah. Thanks a lot, everybody, for coming on this Sunday. And I hope you enjoyed this, and do check out our newly launched product. And do let us know if you have any other questions.
Sounds good. Thank you, guys.
Thank you.
Thank you.
Right.